All right, what's up, everyone? Good morning. Let's see what's happening in the markets today. All right. I'll give it a few minutes for everybody to join in. As always, this session we're going to talk about scalping because I've been scalping the last couple of days, but giving you more of a safer type of trading. So we didn't hit those trades, but today we're going to talk about how we can scalp. All right. So give it a couple of minutes. 1 second. All right. It's 9 o'clock. So we have, as always check your calendar in the beginning of the week and in the beginning of every day, right? You need to know what news are hitting the markets at what time, so you're not sitting in the positions with a thumb up your ass and be surprised. Maybe for some of you it's not a surprise, but hey, keep it private. TMI. All right. So, what are we doing? I am actually, I'm going to show you the gold, what I see in gold right now. So let's say, even if you're trading, so it doesn't matter if you trade a swing trade or a scalp trade, you still have to do one thing. It's go zoom out on a big picture and identify where the trend is, and then drill down from weekly, daily, 4 hour, 1 hour, 15 minute, 5 minute, whatever, right? You need to drill down to see if everything is lining up for you to take that trade, okay? Everything needs to be lined up. Otherwise, you're just shooting in the dark, okay? You're just throwing darts randomly and thinking that it's gonna work out, it's not gonna work out. You need to stack probabilities in order for you to win, all right? So how do you stack probabilities? You go through top-down analysis. Top meaning from weekly, monthly, weekly, onwards, downwards, right? So you drill down from weekly, daily to 4 hours and 1 hour, and then you pick your entries on 15 and 5 minute chart. Some people like 1 minute, but I don't usually drop below 5 minute myself if I'm scalping, okay? Always when you're scalping, do not use, because the percentage of winning is going to be substantially lower, I usually don't trade as big as I would take on a swing trade, which is a high probability trade. I'll just let it run, and that's that, right? So the entry, when I do an entry from 4, and it's a reverse of what they teach you in books. In books, they teach you go all in on a 1 minute chart and whatever, right? The reason why they teach you that is because all these books are written by people whose vast interest is for you to lose money. They appear as if they're teaching you something, but in reality, what they're teaching you is what banks want you to, how banks want you to trade, essentially. Okay, they teach you this technical analysis, and the bankers do the reverse of it. That's why you constantly lose. That's why 90% of people lose. One of the reasons. All right, so you need to do reverse of a lot of this bullshit that they being taught. All right, so daily chart yesterday was quite bullish on gold. All right, so as you can see, it was a pin bar candle, which is my favorite type of candle, indicating that at first this candle was like this one, right? It was completely bearish, and people were selling, and now they're stuck. Okay, now they're stuck, and their stop losses were probably above the high, and this is why we got pop. We took out the stops, and now we're kind of in between limbo mode. That's the daily kind of what's daily is telling me for now. Okay, so let's drill down to 4 hour. What do we see on 4 hour? Well, immediately what I see on 4 hour are a few things. We had a move lower. We were trending lower. We took out highs. We've attempted another move lower. We didn't take out these lows, and now we're trying to bounce. Not only that, you essentially have shoulder, right? Head, neckline. So this is an inverted head and shoulder pattern within an inverted head and shoulder pattern on 1 hour chart. Okay, so the neckline is this. You also have a breakout of this trend line, as you can see here, We broke out, stopped out the people who joined late on this sell-off. We popped their stops right here and took profit immediately, and the price reversed. Okay, so right now you have a breakout, a retest, and an attempted continuation. I'm trying to trade this attempted continuation. Okay, so it can still do this and then take off. So you know, it is what it is. Right now, let's take a look at the 15-minute chart. So you can see that, let me remove this 1 second. Clean it up a little. All right, boom. Why is it not visible in 1 hour? There we go. So it's 9 o'clock right now. So 9:05. We obviously, the big volume of orders will be flowing in right now in 23 minutes when stock market opens. As always, I tell you, wait for the chop, the initial volume to hit the markets. Within 15 minutes, you'll know afterwards if the direction is where the money is flowing, basically. But in the beginning, the first 5 minutes, you essentially have up and down, down, up. And you should avoid the first 5 minutes of stock market open, because it's just random orders getting executed, okay? And you don't know who left what orders, with which brokerage, with which bank, et cetera, et cetera. So it's just a free-for-all. So let that book chew itself through before you're going to see an established flow for the day, okay? This gold is all right, let's see. It attempted to bounce. Let's see if we can right here was going to be another entry. 5-minute chart. We also want to watch silver. Silver is showing us actually quite a bearish scenario, with an overall trend still kind of upwards. Let's wait. By the way, we're going to give some account giveaways, and 1 second, guys. 1 second. Yes, so we're going to give a few accounts giveaway right now. I think the best questions, as always, and comments win accounts. So Nick will be one of our moderators, and maybe a few of our moderators will be gauging who asked what, and they'll also pass on a few questions to me. All right. And then I'll read those questions out loud in the on the live. And then also, starting tomorrow, we also want to spice things up a little bit. Not just me yapping and yelling. We're gonna bring funded traders from FundingTraders.com or from FundingFutures.com, FX traders and futures traders, basically to live on air. You'll hear not only from me, you'll hear from other people who trade as well. Okay, so they might share something with you, since they have less experience than me, most likely. Well, for sure. They might point to things that elude me already, because I've been, it's obvious to me, but not so obvious to somebody who's novice, right? So, somebody who's good at racing cars, and drifting might be obvious how to drift a car, but to a newbie who just got their license, drifting is a very complex type of maneuver, right? So same thing here. So we have this head and shoulders with a retest. We can still go a little deeper, obviously. That's why I have these fibs on, these yellow fibs. I'm measuring how deep the pullback will be and from which levels it can be bouncing. How do I know if the fibs are working? Let me remove this for now. Clean it up so it's easier to see. All right, so how do you know if the fibs are working or not? Very simple. Do you see the fibs bouncing from certain levels? Yes. in this case, right? So you have 38.2 right here, boom, straight up bounce. You have 50% here, boom, an attempt to bounce, okay? So I'm long right here. I saw this candle, I'm long right here. My stop losses are here. All right, so I'm targeting 1-to-1. Well, you can see it. This is the trade. So whether it's going to work out or not, I give it an, obviously you can put a stop loss here, but then people who bought here, they got stepped out and then it bounced. So I don't want that to happen to me. I like to give it some wiggle room. And so even if we get a deeper pullback, I don't give a shit, okay? It will, if it bounces from 618 or 702, as long as it doesn't go pretty much below the 786, because when it goes below 786, it's pretty much over. It's probably going to be retesting these lows. And then if these lows get popped, then I can quick scalp buy because I know it's going to pop, kind of like it popped right here, right? And then reverse. So same thing here. That means we're in a ranging environment, and you just need to trade the lows and the highs of the range, okay? Right now, we're attempting to see if this head and shoulders has some legs to run. Pardon the pun, right? So this is the head and shoulders as described. And, right, it's a reversal pattern, okay? You can call it head and shoulders. You can call it whatever the hell you want to call it. Every single book on trading will describe it in its own and its own these reversals in its own vocabulary, jargon, whatever. But it doesn't fucking matter what you call it. It's basically up, down. The price is going down. All of a sudden, it popped and it took out the previous high, and now it's attempting to bounce. Will it again? As us as traders, we don't know whether or not it's going to be successful. So in the regular technical analysis books, bullshit. You essentially have the neckline. You have to wait for the neckline to be broken, retest it, and then bought. You buy right here. But because I had this trend line breakout retest, yesterday was just one-way traffic, right? So this one-way traffic is being corrected right now, and that's all this is. This is just a slow correction because as you can see, it's still. This is one leg up, as you can see, one swift leg up. This is getting choppy. So the chop indicates this is a corrective type of price action. So you don't want to be wiggled out just because it's chopping right now. If you're going to get stepped out, be stepped out somewhere where you know that this is this trade is not really working out. Okay, so right now these lows are holding, and it can easily, like I said, go to 618. 702 or it's 786. All right. Stan, do you usually use? Yeah. So obviously, if you want to do something like a swing trade, the no-brainer swing trade would be very simple. Is this? You know, the proper stop loss should be below yesterday's lows. Because if we take it out, that means this candle is invalidated, and we're gonna start rolling over. That's where the your stop loss should be. But not a lot of people, especially novice traders, they trade too big, and they don't have they don't have the firepower usually if they're trading their own account, not when they're trading prop firm money, obviously. But if you're trading your own money and you have, I don't know, a couple $1,000s, that's an expensive stop loss, right? So you need to gauge the stop loss to be no more than 1% loss of your account, though. But you know, when you're trading $1,000, 1%, you know, it's not $10. You know, it's not very interesting, so to speak, right? You're going to be making $10, $20 a day from your $1,000. You know, it's hard to live in a first world country on that type of money, right? So that's why you use FundingTraders.com, FundingFutures.com to utilize our money, but your talent. So we utilize your talent to copy your trades onto our account while you get paid from trading a larger account capital, okay? That's the whole point. It's a symbiotic relationship where we both help each other, which is called capitalism, right? So both party benefit and both party make money or lose money together. So that's the deal. you know, and that's a lot. I think that's fair, right? That's why I actually like the markets, because markets have no prejudice. They have no, they don't give a shit at all about anything but making money. So you can be from Mars, you can be, you know, sex changing your, operate, you know, attaching and reattaching genitals in California all day long. I don't care what you do. You know what I mean? As long as you make money, you're good. Okay. All right. All right. Let's see what's going on with stocks. We got 15 minutes to open. So right now, before the market opened, there's a lot of bullshit flow. What's a bullshit flow? Bullshit flow is to sucker in novice traders thinking one way or another. They think that the traffic is going to go this way or that way. Essentially, usually I take trades only after, usually, if it's not a swing trade, if it's a 15-minute, 5-minute scalp, usually after the market is open. You can see, right? Pop stops, pop stops. Now we just pop these stops right here, people who are long here, and look at this candle immediately, right? Do you see this reaction? This is your job as a trader. You're an investigator. You're watching the price action, and you're determining. These candles are showing you what the fuck is happening. You can literally see morons who were scalping just got popped, all right? And people who pushed the price down, they took profit. That's why you had this initial reaction of profit taking, all right, at these lows. So we need to wait for the candle to close. But that's, that's that. And now we are, you know, it's 9:17. Like I said, wait for 9:30 flow. Wait 5-10 minutes. Once you start seeing established trend happening, that's when you can hop on the trade. All right, let's see. So yesterday we started bullish. That was yesterday. No, that was last week. Jesus Christ. Yeah, this was yesterday, right? 9, 8, 9. So you can see we did the. This is the opening candle around 9:30. There's an hourly, so 30-minute. You had this up and down. Then we essentially sold off into the afternoon, and then a reversal in the afternoon. So markets usually divide themselves into special hourly zones. So for example, the first trading window will be 7:30 till 9 a.m. New York time. All right, so this is when you trade. When the 7 a.m. flow comes in, basically bankers come to their desks at 7 a.m. They start executing orders. That's why usually, you know, you can watch Europe doing one thing, and then in a reversal at 7 a.m. when U.S. traders come in, they reverse the European price action. Okay, very common. So then, obviously, the next trading window is 9:30, 9:40 till 11:30. Is before the lunch hour. A lot of traders just trade that session, and then they fuck off. You know, they literally just go. They're done for the day. They trade for 2 hours, very high focus, 2 hours, and they make money during those hours to then have the rest of the afternoon free. Okay, so then you should never be trading. There's a dead zone. The dead zone is lunch hour, 12 o'clock to 1 p.m. New York time. Everything is in New York time. Why is it at that hour? Well, because traders used to take lunch, okay? And the algos that are programmed now, they're still programmed by traders. So even the algos, they take off the volume during that hour because they don't want to be caught in a low liquidity environment to get slapped in the face. And that's why you usually have morning flow, lunch hour, where you shouldn't be touching anything until 1:15, 1:30 in the afternoon, and then you have the afternoon session, so to speak, till 4 p.m. till markets close, stock market close, and then 5 p.m. till forex rollover happens, and the futures close for 1 hour as well to do the settlement. Okay, to settle all the trades for the day. That's why there's the rollover and everything else. All right, so let's see. Let's see some questions. For now, we got 10 minutes or something. I'll do some questions. What time frame is the best time frame to use fib? Anytime. So markets are fractal. You know, you can use it on the 5 minute, you can use it on 15 minute, you can use it on 4 hour. Obviously, the shit you see on 1 minute is a lot more noisier than a shit you see on a 4 hour basis or a daily basis. So that's why daily and weekly levels are key. Why? Well, because institutional players who have tens of billions under management, they simply cannot buy $1 billion worth of anything with just a click of a mouse button. Like you know, oh, let me buy euro dollar, bam, right? It's a big order. So they don't sit on 1 minute chart pondering what the hell to do. And their investment horizon, meaning how far out they look, are you know, years if not decades out. So they don't need to be fucking around on 1 minute chart. It's irrelevant. They just see the major flow on a day, on daily charts and weekly charts, and base their decision making from those charts. That's why these charts, the higher time frame charts, are better for analysis and better for entries. They have more substance to them, less noise. Now, the markets are fractal. So if you adapt yourself to do the same thing on a 5 or 1 minute chart, you can, but there will be a lot more noise and less hit factor, so to speak, on those setups. Okay, so you should be okay with that you're going to be losing, instead of winning 80% of 70% of the time, you're going to be 50, 50, 55, 60, 40, you know, and that's fine. That's the kind of like the gist of higher time frame. 1 second. Yeah, so this is the time frame I would use for the. Again, I always have fibs on daily. I just removed here, but usually have fibs on daily just to see the big picture. So the big picture here this was the last leg up. You know, I would want to fib it here like we had it yesterday. So we bounced off 618. I thought we're gonna go maybe a little deeper to buy it, but we didn't. Okay, we can still hit it, and I would still be looking to buys because the trend is still up. Okay, but we might create a ranging environment for the summer as well, as you can start seeing now here. You know, essentially this is the top, this will be the bottom, so we can still be bouncing off these levels like we did from 618, like we did from almost 50, right? We can still do bounces, and on an hourly time frame, that's a hell of a bounce, right? So on an hourly time frame, this was, you know, it bounced from here, where was it, 96 to 45. So 40, you know, not bad at all, right? So almost 50-point jump. You know, anyway, right? So not a bad bounce. Just trading big daily levels. 1 sec, let me remove this. But to keep the charts clean, I'm gonna obviously remove it and just concentrate on the chart at hand. But I keep it in my head that there are fibs there at these levels, and well, I keep those charts on. But to do the live, obviously I clean the charts up, and that's not a bad thing either, because sometimes when you have too much shit on your charts, and that's usually one of the other mistakes that novice traders make, they have 3 quadrillion indicators, which is normal, because this is how you learn which ones work for you, which ones don't work for you, okay? So you have whatever you have, right? You have moving averages, RSIs, MACDs, lines, proprietary buy-sell signals, this, that, blah, blah, blah. And so that's a normal process. You basically, when you learn in the beginning, you throw everything in one pile, and then you start process of removal. This doesn't work. This doesn't resonate with me. This doesn't work for my psychology, my etc. Right? Personality. So you start removing things that don't work, and that requires time. That's why trading profitably requires at least 6 to 12 months, probably 24 months, because you just first you learn the ABCs, then you start learning, you start experimenting a lot. So until you find a winning formula for yourself, it takes time. Okay, so and you find that formula through a process of reduction. You reduce the amount of crap you have to the point where a lot of times you might not even need anything anymore, and you can just do the price action itself, which is fine. 1 second. Yeah. So what time is it? 26. Okay, 4 more minutes. Right now, there's no point in entering anything right more. 1 sec. How do you combine trend line breaks with Fibonacci retracement levels to confirm interest in during high volume session? Yeah, so again, it's all about stacking the probabilities, right? So you want to stack the probabilities in your favor. You use Fibonacci, you use breakout, retest, continuation patterns. You can use smart money concepts, retarded money concepts, ICT, no ICT, alien, voodoo magic. It doesn't matter as long as you have, as long as there is some validity to these things, and you have tools that stack up into your favor. You should be good to go. Okay. And look, as I told you, the bullshit flow right prior to the open shook out weak hands who were just rushing to buy the breakout, retest, continuation. It shook them out, and now the price is going up. All right, and you're like, stop it. The broker ran my stops, man. Right? The broker couldn't give a shit about our, $1 million. 10 million bucks. It's irrelevant. These money are just funny money to them. Okay, they don't give a shit. Nobody ran the stops. I mean, nobody specifically ran your stops. See, I explained to you that you're gonna have a pop below and a reversal, and this is exactly what happened. It popped below, stopped all the retards, and now, and that's why if you're doing something on a 15 minute chart, I don't like short. I don't like tight stop losses. Because tight stop losses, this is what happens. Okay, obviously right now the time wasn't ideal for the entry because it was prior to 9:30, but that's fine, whatever. For the sake of doing live, we do it. It's not like I have you don't watch me the whole day, right? So it's not like you're from 7 a.m. till 4 p.m. And I don't think I used to do those long ass lives, but on Discord, but it just too time consuming. I got other shit to do, and most of the time there's nothing to do but wait for the setups anyway. So we're trying to squeeze in as much as possible in this 1 hour we're together. Obviously, join Discord for more information, or I can follow up on trades in our Discord and our Telegram channels. All right, Stan, what's the best way to filter low quality setups on the 5 or 15 timer to avoid over trading, especially under the pressure of minimum trading day requirements? Okay, so for the day trading, you need to low quality setups usually happen during low liquidity hours, right? So you have to understand that at 6 a.m. New York time, it's not a time to trade on a 5 minute chart. That's why a lot of day traders, they only trade with an hour or two a day. They trade in those from, like I said, either 9:30 to 11:30, 9 to 11, whatever. 8, another window is 7 to 9, 8:30ish, I would say, because they usually around 8:30 you have news releases. So a lot of people want to see 7 a.m., 6:30, 7 a.m. flow, bank flow. It goes one way, and then people start taking profit during pre news releases. Okay, so since 8:30 is usually the time when the news get released, people just trade from 7 to 8:30 ish, or rather 8:20 ish, and then they take profit, and then they're done for the day too. So you have these windows, and that's why it's important to know where you are on the calendar. Okay, all right, let's see. Stock market just opened. Let's see the initial flow. See, immediate huge candle immediately. Why? Well, because market just got hit with a shit ton of orders. That's all it is. Nothing, there's nothing, nothing to it. It is what it is. And let the market establish a trend right now after it chews through all the bullshit. Okay? All right, let's do some other questions while we're watching what's happening with the open. We still have 5 minutes anyway, so let's do it. So look, silver turned around, a 1 minute chart. Gold also is turning around. So again, people who were trading this got stopped out. This was a head and shoulders on 1 minute chart, by the way. So anyway, let's see what happens. Let's see. Let me read it out. Hey Stan, do you suggest using COT data trading? If yes, they're reliable. So yeah. So there's a great trader who. A lot of traders rely on COT data. I don't, but because it usually COT data is good to spot reversals. I don't like trading reversals that much, okay? Because that means you by hunting a reversal, you miss a lot on the trending move, right? So let's say this is a stock market, all right? Well, it's a stupid example, right? So this is the last couple of years. Let's, for the sake of argument here. So this is COVID low, right? And this is the move. So people who hunt reversals, they were trying to short here, 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 here. Maybe they made money here, but lost money 5 times here. Okay, definitely tried to short here, got stopped out. So they constantly they teach their brain to look for reversals, and then they they miss on this rally instead of just riding the wave up. Where's the obvious trend? This was lower highs, lower lows, then first time lower high, higher high, and then it went off to the races. Okay, so why you can just trade the trend and ride the whole thing up, right? You can be catching this whole move. Now, obviously, you don't buy it here and sell it here. I'm not saying that, but you can be in and out, in and out, in and out with the direction of the trend, right? Instead of trying to hunt for some levels where it can reverse, and you miss out on the whole fucking shebang, essentially. Okay. Other means why COT data is good for futures or any or forex, but COT data comes from futures markets. It's basically positions of professionals versus non-professional traders and commercials, right? So they have to report their sizable positions to they have to report their position sizes and everything, which is transparent information for everybody to access. Okay, so you can see where a gold miner will be short gold versus some unprofessional traders which positions they're holding, and this way you can see if the market, if there's only one way kind of overcrowdedness, market usually reverses because they're out of buyers or out of sellers. So it's a good thing to keep an eye on. But personally, I just don't need it myself. Okay, but it's good to track people who analyze COT data. So even though that would be probably the good answer to how to utilize COT data, just follow people that chew through it and tell you that the positioning size has increased in this by professional and non-professionals, and who is positioned in what direction. Okay, so but again, I just myself, it's a piece of data, but I don't use it for as a main criteria to enter a trade personally. Okay, because the price action reflects everything anyway. So if you have unsustainable price action at the all-time highs, running, there's going to be a fundamental push one way or another. It happens once in a while. You get some weird move, but you can usually ascertain what the fuck is happening, and when price is getting close to exhausted, overbought, oversold, to kind of not to chase markets. Okay, so COT data can be helpful for you to not to chase, essentially, as well, and wait for the pullback, and then a reversal. Okay. There's also a inverted head and shoulders starting to develop here on 1 hour basis of NASDAQ. Obviously, shoulder, head, shoulder. Okay, so gold cannot find its traction. Oops. 1 second. So we just wait. Let's see other questions. How to work on revenge trading and risk management. Revenge trading is the stupidest thing you can do because 7 out of 10 times you're gonna lose even more money. The reason why you were in a bad trade to begin with was because usually if you're in a series of bad trades, something is off with your emotional state and you're not operating optimally. So you need to pull back and step away, reset, and then approach it once again. When you revenge trade, you're all emotions, you're mad, I'm like, I'm gonna fuck this market up, and guess what? The market will fuck you up. All right, so usually you walk away. If you have 2-3 trades, if you're a day trader and you have two shitty trades a day, just walk away, close, shut it down. Don't watch, don't do anything, just walk away because you need that emotional state to reset. Go for a walk, go for a jog, go hit the gym, as I always been saying. You need to reset your emotional state. You cannot be trading in a negative state and expect positive results, okay? Usually, right? So it's like, it's just you're not in the right headspace to make critically emotionless decisions, okay? Logical ones. You're operating with the different parts of your brain because the emotional parts of the brain, especially fight or flight, the one responsible for trading, that's a lizard brain. That's an old right? And prefrontal cortex is the logical part, the new brain, the one that evolutionary got developed. And they usually when you're in a fight or flight, your logic just fucking goes out the window. If you haven't been in an argument with I'm sure you've seen, you've been in arguments with people who are so emotional, we all know this, right? The logic just escapes them. And this is what you're trying to revenge trade. You're that, pissed off girlfriend, boyfriend that are just yelling and screaming and they're in that type of emotional state where there's no logic anymore. And this is why revenge trading doesn't work. Obviously, that's an extreme example. But when you're off, and all you need to do is just walk the fuck away. You're making 2-3 trades consecutively bad, and you know that you had a fight with your boyfriend, girlfriend, or something happened in personal life, some issue arose, and it's on your mind. Just walk away, go deal with your life, come back. That's why trading is so hard. You need to be on point. You need to be, like I said, Ty Lopez said. Yesterday I was talking about it. I forgot, and I went off on a tangent. So he said, I've never met a day trader who, if you see a day trader posting pictures on Instagram who is in the clubs, popping bottles, doing all the, Instagram shit, that's not a real day trader. Because the real day trader, that's a 24/7 fucking job. Even though you don't need to be in front of screens, but you always know what's going on in the market. You're always in a news cycle loop. You always watch the markets from your phone, at least you don't have time for to make money. You can be a trader which loses money or doesn't make a lot of money. A bullshit artist, yeah, sure, they're gonna show you pop bottles, buy my course, right? With your money after. But real traders, they simply just don't have time for this nonsense because it's an all-consuming type of business. It's super hard. It's 24/7. There's no days off. Maybe a little bit on the Saturday, that window, but that's about it. Otherwise it's just 24/7. And if you're a serious trader, you simply don't have time to fuck around. Unless you have decades of experience. But a 22-year-old kid popping bottles, trust me, he's not a trader. He is more of a person who's selling you some bullshit. Okay, that's the God honest truth. All right, how do you work risk management? Well, yeah, that's what you answered. And risk management is simple. You just again, journaling. When you journal, you have a data set of 50, 100 trades as your initial starting point, and then you will start noticing patterns of what works, what doesn't work, and and this is the risk management becomes easy because you know that this is the like right here. If it goes below certain levels, it means it's over, and you need to take a stop loss, and that's it. And you have hard data to back it up. And like I said, because you have a before and after picture, after you watch, hundreds of those, thousands of those before and after pictures with your expectations not meeting the reality of things, you just stop doing the stupid shit, right? Because you saw that out of 1,000 trades I took, 300 of them were I was expecting this, and the reverse happened 80% of the time. So don't fucking take those trades, okay? That's it. That's the whole risk management. You eliminate it because you you rely on data and not on emotion. Maybe it will reverse, or maybe if you're in this is not a hope business. If you're in a hope, if you're in a hope business, if you're praying to forex gods, and God knows we all been there, that means you're already in a bad situation, right? So don't be in that situation, because you're gonna be if you're hoping and praying, that means you're fucked. All right, so you might get out. They might be but you teach yourself again shitty habits. If you repeat enough of shitty habits, they become your the part of you, and then you have to unteach them, and et cetera, et cetera, et cetera. So that's why it's bad, even if you win money sometimes. But on a bad trade, you just taught yourself long run how to lose money. Okay, so that's why it's important to stick to the game plan. Okay. All right, let's see. Yes, what's happening? So there's not a lot of volume today. As you can see, there's not a lot of movement. This is hourly candles. All of US session is just this, essentially, right here. It's anemic. Sometimes markets move, sometimes they don't. But because there's no news, there's no catalyst to push one way or another. So it's kind of like up, down, down, up, and that's it. Not much volume. Not a good day trading day when there's nothing happening, because it's obviously you want something. A trending day makes for quick profits, right? But usually when you have no fundamental catalyst to push anything, the markets kind of just wobble, waiting for the next, because they market future pricing mechanisms, and when everything is priced in, so to speak, the price is at equilibrium, and you don't need to. The markets don't need to move one way or another until there is some kind of change to the narrative, and then the markets the price has to reflect that narrative in its action, right, in the price. So that's a good question. In your strategy, that's a really good question. In your strategy, how do you differentiate between a healthy pullback and a trend reversal when the price hits the fib zones? You will never know. That's the unknown. That's why you have to take. You will never know. You basically take 100 trades. Sometimes there will just be a reversal, and in the example of this gold trade, that's exactly what I'm suggesting. Like if we basically go take out these lows. Obviously, it was a reversal, but it will happen 20-30% of the time. But 70% of the time, there will be a bounce into the direction. That's why it's important to watch the direction of the major trend, and the probability is that the body in motion stays in motion, and that you will have a bounce versus a complete reversal of the price action. So you just take a stab at it. You set your plus, and you don't get mad, because for 70-80% of the time you'll be right, but those 20% of the time you will lose money, and that's okay. All right. It's just part of the deal, and that's why you should. This is not about being right or wrong. It's about probabilities and staying in the gray area, right? Don't get mad just because the market reversed on you, and then revenge trade, and then do all these rookie mistakes. You just need to again backtest your system to the point where you took at least 100 trades in a certain system, and then you start noticing patterns of what to do and what not to do, and it gives you confidence that around this setup, it usually repeats itself, et cetera, et cetera. Okay, that's how you gauge a healthy pullback or not. Plus, again, I don't trade shallow pullbacks. Some people like to trade. Sometimes when markets are trending strong, they just give you 38.2 and then they fuck off. So to kind of make me sleep better at night, I like deeper pullback too, like I've explained in yesterday's video, around 618 to 786 zone, and then I watch for a reversal candle with a follow through, and I jump on the follow through essentially. So that's kind of like I minimize my chances of being I don't leave just orders at some levels for shits and giggles. All right, I want to see a reaction of a level, and I buy into that reaction because then I see a reversal of flow of money going another way, and that's how that's how I prefer to trade. All right, Stan, do you have any books for fundamental analysis? What's the best way to learn it, through books or something else? Okay, fundamental analysis, unfortunately, it's a lifelong type of, because they're economists themselves don't know shit from fuck. They're just mentally masturbating in colleges and universities and writing all these books. And then you have Keynesians, you have Milton Friedman, you have Austrian School of Economics, this School of Economics, et cetera, and nobody agrees, and they all say opposite things. So unfortunately for you, you need to digest that whole slew of garbage to become an expert in it. But I'll give you an easy way out. Forget about, you just need to watch interest rates and job reports and what the economy is doing. Is it improving, not improving? Okay, so interest rates, watching, understanding what Fed is doing, what ECB is doing, BOE, whatever, Bank of England, European Central Bank, United States Federal Reserve Central Bank, right? They set the interest rate policies which further drive the currencies and all the instruments, right? So when they have high interest rates versus low interest rates, it's not that complicated, okay? You can basically go on ChatGPT and explain to me interest rates, differentials, and how it relates to currency pricing, et cetera, et cetera, et cetera. And you will probably pick up more information there than listening to talking heads on TV, or nobody watches TV, but back in the day, CNBC, Bloomberg, everybody, they just pontificate because it doesn't cost them. That's why traders and analysts are completely two different animals. Analysts, nobody's gonna remember that 3 weeks ago this fuckface said whatever he said and he was wrong, right? 80% of the time he's wrong. They're just gonna show a clip of him. Oh, this motherfucker was right in 2008 when he called this, that. Yeah, well, what about 20 times that he said some nonsense and it didn't happen? Because when it didn't happen, everybody already forgot about him, like bad dream, you know what I mean? It just went away. So they have no accountability, all right? Where trading has accountability. Why? Well, because you either make money or you lose money. That's it. All right? Okay, so gold now flow is going negative. This is not good. That means we're probably gonna, let's see. Yeah, and silver is confirming it. So might have to, like I said, my stop, it might go a little deeper, but if we get stopped, we get stopped. It's okay. It is what it is. Part of the trade. All right. Mm-hmm. All right, we hit 618. Let's see if we get a reaction here or not. You can also watch what happens with currencies, because if you see euro dollar bouncing, pound is bouncing, gold is probably going to follow suit as well. So you watch multiple markets to identify what's going on with the overall picture. All right, so they all move in tandem, and they all confirm each other. If you have a disconnect, one showing you this, the other showing you that, there's a disconnect, and it's usually time to stay away. But you want to watch everything. That way you understand the big picture, okay? So, all right. Yeah, all right, so stock market is not doing a whole lot. As you can see, just no direction. So price is just being pushed around one way or another. Okay. All right, let's wait. Let's wait for the bounce. All right. And like I said, starting tomorrow, we're going to bring a few guests over, so it's a little more, not just me yapping, but more of a conversation. Because it's when it's one-way conversation, it's hard to just keep talking for hours. Not hard. It's not about being hard. It just it makes for a better. Plus, you see different perspectives, and you know, there's many ways of making money in trading. So everybody kind of, what your job is as a trader is to absorb a lot of information, and like I said, in the process of reduction, you remove stuff that doesn't work. Okay. We'll announce special guests tomorrow. Yeah. All right. So we have a few lined up for the remainder of the week. We have, so we'll introduce them tomorrow. All right. Where's the magnet? Magnet. There we go. So we're hitting essentially, if this order block right here doesn't hold with the 618, 786 bounce zone, then that means this move is going to go lower, and then we're going to be looking for other opportunities to trade. Okay, that's all it is. I'm just reading some comments. All right, now you just have to wait and see what happens. Okay. See, now you see that the price is pausing at 618. Again, this is why fibs work, because I'm not the only one watching them. Okay, big traders, they watch them too, as in professional traders. And this is, the algos are programmed to have them, to watch them as well. So everybody who's not everybody, but a lot of professional traders, they watch this tool. I think is one of the most invaluable tools, at least I found in my trading. Because again, you see it produces bounces from levels. You can either, at the bare minimum, you can scalp. Sometimes you get the proper, this was the move up. This is the pullback right now. How deep? I don't know how deep the pullback will be, as long as that doesn't go through the whole row. And that's why I like to wait for this level, because then your stop loss is short. You know where you're going to be wrong, and if it bounces, it bounces. It doesn't bounce, it doesn't bounce. Okay. And obviously, you want to watch for a candle reversal pattern. So if an hourly candle develops like this, that's my amazing drawing skills. You see the buyers came in, and then you have a follow through that takes out this top. There's a chance, the higher probability is that it's going to bounce rather than keep going. All right. Okay, we've been yapping for an hour. I'm just going to monitor this situation, see if we produce bounce from any of these levels. If you see, like I said, if you draw fib from here to here, you see one of these candles on a 1 hour or at least 15-minute basis develop, on 15 minutes, you see a 15-minute candle like this with a follow through. You can actually just put your stop loss here, or better yet, somewhere here below 786, and do 1-to-1, 1-to-2, trade easy. That would be the setup from some of these levels for today. But again, no economic news. there's no economic news right now hitting the market, so there's not a whole lot going on. So as you can see, this is a 15-minute since 6 a.m. New York. So this is we're just chop fest. Okay, when it's chop fest, I usually just stay out because there's no point. I don't like trading choppy shit. Okay, I want to see some movement, and usually for movement to happen, you have to have some certain catalyst to happen. Because look, it looked like it's gonna go down, right? This candle right here, right? Look down, stopped out these people, then it went up, stopped out these people. So essentially, we just people who had stop losses here got stopped out by this candle, and people who were short from here got stopped out by this candle. And now we're at equilibrium. At the equilibrium because the price is in the right place, and you need a catalyst for a price to break out of that equilibrium and price in the new information that comes on. But if there's no information, then there is not much to do, and this is how you get consolidating markets. Okay. Again, see, there's always a reaction from big levels. Okay. I mean, it might not be a big reaction, but there's always a reaction. That means that the algos, they know that these are correct levels. All right. And the big traders. So important to watch. All right, ladies and gentlemen, it's been an hour. I will, as I've explained, 15-minute chart, watch for a candle. I will actually tell you if I spot it on Discord. So I'll post it both on Funding Futures Discord and Funding Traders Discord in a general chat or in the trade setups section. I'll post this one if I spot this opportunity and it starts working out, not working out, but when there's a entry, I will definitely post it on Discord. So come join us on Discord and we go from there. All right. Thank you for your wonderful questions. The questions that weren't answered for some reason, again, post them tomorrow. We'll give more accounts, giveaways, and with a special guest. All right. Hope it helps.